What a ridiculous day for the market today. The SPY, after opening quite high and then taking a big drop at around 10 o'clock and then rallying back during the day and then ended up closing the day much lower. But honestly, I've learned to expect the unexpected. This has become the norm. But sadly, I sold my SPY put spread. I sold it up here at the open. Basically, I sold it when the SPY was at 288. So if I had waited, I could have gotten much better pricing if I'd waited for the SPY to drop. But obviously, I didn't know that would happen. So I sold a SPY put spread June 5th, 265, 260, collected $70. Now I'm sure that spread right now is worth probably $85 or $90. Let's go see right now. June 5th, it is worth, yeah, exactly. It's worth between 85 and 97 cents. So I could have gotten a bit more out of it, but whatever. So the way I sold this SPY put spread, I'm going to show it again. So I basically look up the SPY. I make sure I choose vertical. I go 30 days out. So I go to June. So we are June 6th today. So I went to June 5th. And then I just simply click anywhere here. It'll update the order entry window automatically. I look at the current price of at the money put option and the at the money call option. So the at the money strike will be the current market price. So let's say 284. So at the time I did my trade, it was 288. But for now, let's just use 284. So you can see that it's trading at 10, and usually the call will be trading at the same thing. So close to $10. So I went $20 lower. 10 plus 10 is 20. So I went $20 lower than the current market price. So 284 minus 20 would be about 264. But I went with when I did it, the SPY was trading at 288. So that gives me about 268. And just to give myself extra room, I went with a 265 strike, collected 70 cents. But as you can see, I could have collected way more if I had timed it better. But of course, I cannot time it better. But regardless, so these are my positions right now in my margin account. They're all SPY put spreads. I'll be honest, I'm a little bit worried because I feel like at any moment the SPY could just drop very hard. The market could just crash like it did in March. I hope it doesn't, but it feels that way. Now, I've got this SPY put spread May 29th. So it's got 23 days to go. It's got a short strike of 275. So this one is the closest one to being in trouble because 275 is not far from the current market price of 283.68. So in fact, if I see what it's trading for, it's trading for $1.15, $1.28, and I collected about probably 80 cents or 78 cents. I collected 72 cents for that put spread, and right now it's worth $1.15. So I'm already losing money on it, which it makes sense, but it's not over yet because I could still win as long as the SPY is trading above 275 come May 29. And who knows, maybe the SPY will take a nice rally higher. Maybe the SPY will drop below 275, but towards the end, towards May 29th, it might bounce back up and trade above 275. So really, who knows? But I know there is an edge selling puts. So my plan with this put spread for the moment, I'm not doing anything, but if the SPY continues to drop and it hits 275, I'm going to start selling call spreads against it to reduce max loss. Because right now, as this trade stands, if the SPY trades below 270 come May 29, my max loss is basically $5 minus the 72 cents that I collected. So my max loss will be about $428. So that's a lot. So what I could do is start selling call spreads on the other side to reduce max loss. Now, before May 29th, I have a May 27th put spread. It expires in 21 days. This one is showing a very small profit. So you can see here I collected $80, all right, 80 cents or $80. And this one is safe as long as the SPY trades above 265. So this one is much safer than the May 29th one. It's 10 points lower. And it's also 2 days sooner. And this one right now, so I collected 80 cents. This one is trading for about 76 cents about. So it's showing a very small profit. Obviously, at the beginning of the week, it was showing a much better profit. But today, because the market dropped or SPY dropped, it's showing a much smaller profit, but still safe, right? like, I have room to be wrong on the trade. I have room for the SPY to drop and I can still make money. That's why I really like this trade, because I don't have to guess the direction. I could be wrong about the direction and I can still generate some sort of income. Now I'm saying income, but it's definitely not income because it's very small amounts, but hopefully in time it can be bigger amounts. So I also have a put spread June 1st. All right, so this one is 260 short put, so it's safer than this one. It's about 23 points right now, 23 points away from the current market price, so pretty safe, right? It's got 26 days to go to expiration. Now I don't plan on holding till expiration. I plan on closing it as soon as I can make 50% of the premium collected. So the premium collected here is about 30 cents plus 44, so about 74 cents I collected on this, so $74. So I'll try to close it at around $37. It's showing a small profit, I believe. Yeah, so yeah, it's showing a small profit, very little, but it's still pretty safe compared to the current market price. Stock is trading at 283. My short put is 260. And even at 260, I don't lose money. I start losing money if it reaches 255 June 1st. So my max loss on this trade would be $5 minus the premiums collected. Premiums collected is about 74 cents. So I would lose about $426. That's if I do nothing. But if the stock starts to drop, I'm going to start selling call spreads on the other side. So basically it acts as a hedge, and therefore I'm reducing max loss. And since I can't lose on both sides, the puts and the call side, if I'm going to lose on the put, well, at least I collected something from the call side. My max loss is no longer $426 in this case. So I also have this June 3rd put spread. Now this one I opened, I believe, on Monday. So this is part of the last video. And this one I collected, I believe, I don't even remember what, $76 or $78. So June 3rd, I collected $78. So I'm trying to close this for $39. On Tuesday, I think it came all the way down to $40 or $41. I had a chance to close it for $41, but I left a good till cancel order for, if I go to orders, I have a good till cancel order for 39. So it didn't get filled because it didn't reach 39, but it came very close. And right now, I might regret it, because right now it's trading for almost 60 cents. So the second day, in one day I could have closed this trade for almost 50% profit. Instead, right now it's back up to 60 cents. So collected 78 cents, and the next day, the following day, could have closed it for about 41 cents. I didn't, and now because the SPY dropped, it's worth 60 cents, but it's still profitable. It's just funny how close it was to being filled at 50%, and now I have to wait a little bit longer. So my trade today on June 5th, as you can see, for sure this one's not ready to be closed, but let me place a good till cancel order to close this trade automatically, so I don't have to be watching the markets. If I want to place a good till cancel limit order to buy it back, all I have to do is, first of all, make sure that my positions are grouped by strategy. So make sure I click buy strategy. Then I'm going to click create order next to the put spread in question. And then it automatically gives me the order entry to close it. So here I'm selling the 265 put. So the entry is buy the 265 put, because I'm doing the opposite. I'm closing it. If I sell to open, buy to open, I'm going to buy to close, sell to close. And it's showing me 85 cents. Of course, I don't want to close it for 85 cents. I collected 70 cents for this trade. So I'm going to try to close it for 35 cents whenever I have the chance. So I'm just going to leave it as a good till cancel order. 35 cents, send order, buy to close, sell to close. 35 cents, $35, send order. That's it. It should show up in my orders. There it is, good till cancel. So I don't have to do anything now. Now I just wait for the market to go up or for time to pass by. But of course, I'm going to be careful for this one here. As soon as the SPY goes below 275, I'm going to start selling call spreads, maybe at 300 or maybe at 295, just to collect premiums. All right, so let me know what you think about these put credit spreads in the comment section below. If you have any questions as well, leave them in the comment section below. And like always, if you're going to open an account with Questrade, use one of my referral codes in the description below. One of them gets you up to $250 back depending on how much you deposit. And another one gives you $50 in free trades regardless of how much you deposit. Thanks for watching.